Hey guys, it's Jim Duffy with Alcova Mortgage, and welcome to this channel of experts. And I want to talk to you about something today that's really kind of gets me, because so many lenders out there, so many of the big banks or bigger lenders do things, in my opinion, the exact wrong way. And that is, they're charging you way too much without telling you what they're charging you for. And what I'm talking about is in the form of points. Now, every industry has its parlance, right? And I get it, and you kind of have to get what the industry speak. And one of those industry words that we have is points. Points are very simple. It's just prepaid interest. You're paying a little bit extra at closing in order to not pay more every single month, in order to knock the rate down and pay a lower interest rate and a lower amount every single month. In theory, that works. But in practice, I always like to show you what it is to pay points, how much they cost, what it's going to cost you up front, and how much you're going to save, but more importantly, the break even. So I prepared this. You can probably see it on your screen right now at a $400,000 loan amount, right? At a $400,000 loan amount, and let's say the interest rate is 3% right now on a 30-year fixed rate with no points, and you can see what your payment is, and you also see if you buy the rate down with a point, again, 1% of the loan amount, in our case, $4,000, you buy the rate down to 2.75, and that holds true most of the time. 1 point equals a quarter point in rate, and you save $53 per month, which is great, except you just paid $4,000 to do that. So really, the key is figuring out, how long am I going to be in this home? And if I'm in this home for that long, am I going to be in this loan for that long, right? Or is there going to be a chance to refinance, and I'm planning on refinancing, pulling cash out after I do work or whatever. If you're going to be in the home for that long, look at the orange bar chart on that same graphic. You can see that over time, you've broken even over 5 years. You've broken even and saved about $900, a little less than that. Well, that's not good enough, right? You've just saved enough to say you've saved a little bit. So 5 years wouldn't make paying points worthwhile in this case. You'd have to be in the home about 7 or 8 years. And then you've broken even and saved. That $53 adds up every month after you break even, but it takes about 4.5 years to break even in our case. So the reason I say all that is to say, so many lenders do it completely and utterly wrong. They're not letting you make the decision by saying, here's the break-even point, here's how much you save, here's how much it's going to cost you. They just charge you a point and say, oh, but the rate is better. I prefer to show you the options. Let's walk through them together. Really get your scenario down. How long are you going to be in this home? How long do we think we'll be in this loan? And if all that matches and points make sense, then great. It's your decision. You've decided to pay points and buy the rate down makes sense for you and your scenario. And that's the important thing, is you being educated and making the decision. If we can help you, I'd love to do so. Reach out today and we can work on a pre-approval, but more importantly, work on some options so you make the decision.